Hello guys, welcome back to my channel. I want to share with you the trade that I took today and what was the reason of me taking those trades. And what I'll need for you guys to do is to go and backtest the entries and try to understand what I saw also in the markets and how you could use the same approach to the market and the same entry next time when you see. So the first one that I want to start with is USD card. So what I did, because I saw this trade, then I was expecting also to come and sell, so to come and buy from this area because we've got this institution candlestick. If you can check this candlestick trades inside this block, the one that we have here, markets accumulate from this level, then come down 50% of this block, then market bought up to this level of liquidity. Check the way market create the equal high, then market drop again, gets on this area, build the liquidity. When I saw this liquidity, what I was expecting a fake out from this area so that market can come down and start buying from here again. But at the same time, I was in the sell position that I took somewhere here. So this was just, fake out. We buy, we come and mitigate, then we continue down. So this one fell. Why it fell? I don't know the reason why it fell. Then this was the reason. What happened? You see, market refused to mitigate only this block, but drop crazy. So when I saw market was dropping, I go to M30. I could find this block, the one that is down here, this institution candlestick. Then I say, okay, since there is this one, so market that might come to this area, then let me watch the market, how market is going to play. Let me show you guys what is happening right now. Do you see how market get on this area? Touch the zone there, then start buying from the open of this candlestick, the institution candlestick, then we start buying. So this is was what happened on this one. Then I took my sell position because my sell position was here when markets return and mitigate this candlestick. So I collect my profits on this level. I'm waiting for it to give me a proper confirmation of saying each one to buy. So I'm waiting for it to return again back on this zone here where it start buying. Then this is when I'll take a buy. So that buy can even be just to come and confirm this level because we got a liquidity. So can come and confirm this area, touch the zone here, then drop, or either come again somewhere here, up here. Then from here, this is when I'll take another sell position for us to continue down. That also depends on the strength of the dollar index. Then another trade that was in my list today was this one, was the Euro USD. This is a 5 minute chart. I see market build a strong level of liquidity. If we can check here, we've got the inefficiency, that one that is happening here. Market come touch the inefficiency here for the first time, goes up. You see how we mitigate this the break of structure here. Then I call it as SR flip. Why the SR flip? Because this was acting like a support on this area. There was like a support, then market break, return and come and confirm this level. Imagine if you miss a sell position from here. Here could be your nice entry again with a sell just to come down. Then you identify where there is a block. This was a fresh block where market never returned and test it. If you can check, then check what happened next from that area. What is the Euro USD? Okay, Euro USD is here. So if you can check, this is the M5. This is the M5 analysis. As you can check, markets come all the way to our level. This could be a nice entry. If you are watching also this market, this is supposed to be your nice entry. Market touch this area, then start going up crazy. So let me show you guys. So what I was expecting from here is market to come and mitigate this block here. We mitigate this block, then from here, we come again down up to the 50% of this movement. This is what I was expecting. So market just raise up, up to this area, then drop again. So this is what happened. You see markets raise up until the last up candlestick before the down move. So this is what happened. Let me just show you guys that you see what I'm talking about. You see the last the last up candlestick before the down move. So market just touch this institution candlestick, the one that we have here. They touch this institution candlestick. They bought so crazy, goes up. Then if you understand on the all the other video that I've already explained, I told you guys, even if you watch the previous video, that if market start breaking the level down, so market is gonna buy, then it need to return back to this area again, take the 50% of all this accumulation down that was happening here, then it's going to continue in the direction. If this is what happened here, market return 50%. Now we are buying because of this block. Market now starts uh, consolidating again on this area. So this was the second trade of the day. The entry was here. The profit already we are out. Then here we are waiting for market to give us a proper direction. Then we continue with market. So the last one was gold. This one was the, you know what they say is a fast trade. This was the first one because what happened was I saw this block, the one that is here on H3. The block was there in H3. I marked the block open to 50%. Check what happened. Market just bought crazy. You know, market just bought crazy to go and touch that level. Let me show you guys. What is that analysis? It's this one here. You see, market bought from here so fast, touch this level, then pull back again down. So here it was just a quick move. Hits the pending order, come with the pending order down. We close the trades, then markets start again going up. The next candlestick open goes again there up. Do you see what happened? So this was the movement of today. I used this H3 to fund this block because in H1, I was seeing just there are so many, so many stuff that was happening there. I didn't know which one to use. This was I went and checked. These are the other time frame to see which one the institution the one I use to pull the market again down to this area. Then as you can check, if you go to H3, you will understand why market is again is buying on this area because we have this institution candlestick, the last down candlestick before this up move, then they return again back to the same area. This is why they buy so fast to go there. Now they are coming again down. So what do we expect next? We can expect something maybe to see the markets to come and mitigate this area before we continue again up. So this is also another possibility of what market is going to happen today. But today so far I missed Nasdaq. I was not trading Nasdaq. I missed a beautiful entry and a nice movement because if I was trading it, I could take an entry. Like I was just checking the way I missed this entry today. This could be a nice trade. Why I'm saying could be a nice trade? Because if you can check where markets bought, markets went up, then return again to the same area. This is the same zone here. Markets return to this zone. What we can do, we could even just make, this candlestick open to the close. We look for the 50% there. We could take our entry somewhere here. Even give it a room to breathe because we've got a long week here. Or what we can do, we just come to this week here. You see the wick is there. Then we can go to low time frame. Let's say M15. Let's say M15. Then you see there must be a block on that area for us to take an entry. You see the block is there. So this could be our perfect entry for us to continue up. So this is the trade that I miss. Markets break the level. As I always explain to you guys, how do you know these things is just back testing? Then you understand. So let me show you what happened on this level. Market build the liquidity here. Market break downside. Then what is our focus? If you want to take a trade to continue with it, we wait for market to return back to our Q level, our 50%. So markets return to our 50%. Then here we check the entry, then we could go. Then here market decide again to come back to the same area. Markets return again, come in the same area. So market was just playing on this area. Do you see what is happening? But if you could check your entry from here down, this one wouldn't even affect you because we are going up. Then where do you target? You target the level where you see there is a liquidity that can push this market. You see here we've got the liquidity. Here when markets come down